8:07 a.m. You open your email almost by reflex, before your mind has time to catch up. The subject line has exactly 2 words: organizational restructuring. No greeting, no opening line, not a single sentence trying to make this feel less cold. Just an attachment. A list, 200 names. You scroll down. Your eyes move faster than usual. Not the kind of reading meant to understand, not even to process information.
No.
You are searching for one thing
This
only,
can't be
your name.
right.
You don't see it. You pause for exactly 1 beat. Not relief,
They're all gone.
not quite. Just the feeling that you haven't fallen. Not today, not this morning. A kind of temporary safety, so thin you almost don't trust it. In the tab next to it, the company stock is up 6% pre-market, a green number. Clean, neat, beautiful in
You're
the
the
emotionless
thing
way
I'm seeing.
market numbers are. No names inside it, no faces. No one appears there, just a rising line, a positive signal, something outsiders would call good news.
Where's my
You look back at the
name?
email. Restructuring. A phrase so neutral,
This
it's
can't
almost
be
sterile.
right.
But underneath that clean language is a very specific action. Cutting costs, improving margins, making next quarter look tighter, making the report cleaner, making the investor call less tense. 200 people disappear from payroll, and at the same time, millions of dollars are freed from operating expenses. The market reacts instantly. No emotion, no waiting, no wondering how many people just had to text their spouse, their parents, their landlord, their bank. No concern for anyone sitting frozen in front of a screen, coffee still unfinished. It reads one thing only: cost down, projected profits up. That's enough. You might think this is just a company issue, an internal decision, an unlucky email, a bad day for a specific group of people. But no, it's not just that. It's a line in a model. A variable just adjusted in a capital allocation system. A decision optimized long before it was written into words. A choice accepted before someone pressed send. You're not on the list. This time. You close the email, but that number is still there, plus 6%. It just sits there, calm, indifferent, as if these 2 things have nothing to do with each other. But if you look long enough, closely enough, clearly enough, you start to see the thread connecting them. On one side, people. On the other, capital. And this system has never confused the 2. On the surface, this video might look like a journey, from low balance to high balance, from nothing to a lot. A familiar story, easy to digest, easy to relate to. Easy to make you think that if you just try a little harder, sacrifice a little more, endure a bit longer, your turn will come. But that's not what we're really talking about. This is not a story about how much money you make. This is a story about who gets to move up when the system shifts, who gets pulled closer to the center, who gets held at the edge, and who doesn't even get told that the door just closed. You've heard the other story many times already. Work hard, save consistently. Invest long term, be patient. Eventually, everything will work out. And to be fair, those principles are not completely wrong. The problem is they are not the whole truth. They are the surface layer, the part simple enough for anyone to repeat, the part compact enough for the system to run smoothly without being questioned too much. The truth underneath is far less neat. You don't really climb levels. You are allowed into them. And that permission rarely comes from effort alone. It comes from where you stand, from the network you can reach, from the capital you have access to, from timing, whether you step in when a door happens to open, from whether someone pulls you in.
Subscribe for more story about money, power, and the system.
From the very beginning, the playing field is not level. You are taught a very clear path: study, get a job, earn a salary, save, invest, repeat for years. A straight upward line, as long as you're disciplined and don't do anything too stupid. A formula that seems fair because, in theory, anyone can follow it. You believe in it, not because you're naive, but because it's the only story repeated enough times to sound like truth. It gives you the feeling that you're holding the wheel, even though most of the biggest variables are outside your reach. Market efficiency, long-term investing, hard work pays off. These phrases repeat so often, they stop being advice. They become the foundation of how you understand money, work, and your future. They become the voice in your head every time you wonder why you haven't gone further. And yes, within a certain range, they do work, but only within a certain range, only up to a point, only until you hit the real part of the machine. Zoom out a little further, and you start to see each role more clearly. You are the employee. You exchange time, energy, focus, and sometimes even your mental health for stable income. Your employer optimizes costs to improve profit. The bank provides leverage. The market reprices everything based on future expectations. And behind all of it is institutional capital. Flows large enough not just to react to the market, but to make the market react to them. You are living inside this system, but you don't see all of it. You are taught how to survive inside it, how to behave correctly, how to make reasonable decisions, how to avoid basic mistakes. But no one really teaches you how to read its structure. You are taught how to exist in the system, not how to understand it. And at some point, you begin to notice things that don't quite fit. You see people who do less but move faster. People who are not necessarily sharper, not necessarily more disciplined, but still break out earlier. Not because they are purely lucky, not because they deserve it more in any moral sense, but because they are standing in a different position on the board. Imagine two people with the same ability, the same intelligence, the same working hours, the same discipline, the same seriousness. One continues as an employee, stable income, slow accumulation, a predictable life. Each year, a small step forward. Every major decision must be weighed carefully because one mistake can take years to recover. The other has access to a piece of seed capital, not necessarily large, just enough to start, enough to take a shot without dying immediately if it fails, enough to buy time, enough to hire faster, enough to avoid making decisions out of desperation. Add to that the right network, a timely introduction, an invitation into a room the first person doesn't even know exists. And then timing, when the market opens just a small gap. The outcomes will be different, not slightly different, completely different. Not because one works dramatically harder, but because one is placed in a different position within the system. And that's where the story becomes uncomfortable. Because if that is true, then many of the things you once believed no longer stand the same way. Doing everything right no longer guarantees the same outcome as someone else. Effort still matters, but it is no longer the only deciding factor. Merit doesn't disappear, but it is placed inside a structure where access determines speed. And when you realize that, a strange feeling appears. Not quite anger, not quite bitterness, more like awakening. A realization that part of the narrative you've believed was not only there to guide you, but also to keep the game running smoothly. To keep those at the bottom believing that if they do enough things right, the system will automatically reward them accordingly. But the system does not reward effort directly. It rewards position. And that position is not always yours to choose. If you stay at the surface, everything will always look random. Prices go up, prices go down, companies hire, then lay off. One person wins, another loses. One is lucky, another is unfortunate. Up close, it all looks like disconnected events. But if you step back far enough to see the full structure, you begin to notice something entirely different. Not a sequence of events, but a machine. A machine that doesn't need drama to be ruthless, doesn't need noise to create pressure, doesn't need to hate you to grind through you. It only needs to keep running according to its own logic. And that machine runs on three main flows. If you don't see these three flows, you will always be reacting, always chasing explanations after things have already happened, always feeling like you're learning a lot, but still missing something. Because what you're missing is not tricks, not tips, not small tactics, it's the map. The first flow is capital. Money never appears out of nowhere. It always comes from somewhere specific, passes through multiple layers, and ends somewhere else. Retail, people like you, provide liquidity. Every time you buy a stock, invest in a fund, deposit money into a bank, or simply leave money inside the financial system, you are fueling the machine. You don't decide its final direction, but you allow it to keep running. Banks take that flow and create leverage. They don't just lend the money they hold, they expand it. $1 becomes multiple dollars through credit, and every additional dollar created is tied to a future promise, an obligation to repay, a chain of payments extending forward. A burden that someone at a lower level will have to carry. Then come the funds. Funds don't create money. They decide where money goes. They allocate capital to where returns are most attractive relative to the risk they are willing to accept. Not the safest place, not the most ethical place, but the place where the risk-reward ratio looks most reasonable from their perspective. Then corporations. This is where capital is absorbed and redistributed. Businesses receive capital, deploy it, expand, acquire, cut, restructure, lay off, optimize. These actions, viewed individually, may look like normal management decisions, but within the larger structure, they are how the system transforms capital into profit. And that profit ultimately flows back to those at the higher levels of control. That is the flow of capital. But money does not move on its own. Behind it is another flow. The flow of power. There is a layer of decision-making. Fund managers, executives, people who not only read data, but decide which data matters. They don't just react to numbers. They define what those numbers mean. They don't ask, is this good for everyone? They ask, is this optimal for capital? Does this strengthen position? Does this preserve growth, margins, valuation, influence? Below them is the execution layer, employees, the ones who write code, run operations, sell products, execute campaigns, cut costs, fix problems, clean up consequences. They are the hands of the system, the ones who turn decisions into action. But they are not where decisions are born. Below that is an almost invisible layer, retail. The ones who provide liquidity, absorb volatility, react to headlines, buy in hope, sell in fear. They have data, but no context, information, but no full perspective, the ability to participate, but not the ability to design. That is the real difference. Power is not about whether you have money. It is about whether you can decide where that money goes. Then comes the third flow, the one most people feel, but rarely look at coldly enough to name. The flow of consequences. When markets rise, everything feels simple. Everyone feels like they're winning together. Green portfolios, rising valuations, positive news, more success stories. It feels like the system is working for everyone. But when pressure hits, you see the true design. A crash happens. Retail loses money. Not because they are stupid, not because they are inferior in character, but because they are at the end of the reaction chain. They see later, understand later, act later. They often buy after the narrative has become strong enough to feel safe, and sell after fear becomes too overwhelming to endure. Corporations restructure. The language stays clean, but the reality stays the same. Cut, lay off, optimize costs, clean the balance sheet, shrink to survive, push the pain downward. Large institutions reposition. They don't necessarily leave the game. They change position within it. They sell what is being punished and buy what will benefit. They use volatility as a tool instead of being used by it. That is the difference between being inside the wave and standing above it, watching it move.
Subscribe for more story about money, power, and the system.
Risk does not disappear in that process. It does not dissolve. It is not resolved in any moral sense. It is transferred downward, from higher levels to lower ones. From those who can absorb it to those who cannot. From those with buffers to those without. From those who see volatility as strategy to those who experience it as a direct threat to their lives. The debt trap is a very real part of this mechanism. When you borrow money, what you receive is not just money. You receive a long-term obligation, an obligation that narrows your future choices, a constant pressure in your mind, a monthly payment steady enough to become the rhythm of your life. And when enough people are locked into obligations like that, the system becomes more stable for those who control it. Cash flow becomes more predictable. Behavior becomes easier to shape. Risk shifting also happens continuously.
Dưới đây là bản dịch tiếng Anh đầy đủ, chính xác, không cắt bớt hay bổ sung thêm bất kỳ chi tiết nào từ phần bạn đã gửi.
A risky investment at the upper level can be repackaged, broken down, retold with a more digestible narrative, and then sold to lower levels under the name of opportunity. The language changes, the packaging changes, the slide deck changes, but the nature of the risk does not disappear. And then there's something even more subtle. Earnings are adjusted. Not blatant fraud, not something ugly enough to become a documentary scandal, just the use of legal gray areas, pushing an expense into the next quarter, recognizing revenue a step earlier, extending the accounting timeline of a loss. Just enough to make the numbers look good at the moment they need to look good. You don't see those decisions when you open the app and watch prices move, but you are living in their consequences. This machine does not need you to understand it to keep running. It only needs you to participate. And if you participate long enough, one thing almost certainly happens. You begin to change. At first, you are an employee. You trade time for stability, a steady salary, a predictable schedule, a level of safety just enough to let you sleep well a few nights each month. You work, you get paid, you repeat. The system rewards you with certainty, as long as you don't look too deeply underneath. Then, at some point, that trajectory starts to shift. You become a builder. You no longer just sell time. You begin trying to create something that can exist beyond the hours you put in. A product, a service, a small asset, a stream of income that does not die the moment you stop working. At this point, the word asset is no longer a nice concept from a book. It becomes something real, something that can earn money while you are sleeping, tired, away, or simply not sitting in front of a screen. But the cost of that transition is the loss of stability. Income is no longer consistent. Risk increases, certainty decreases, and you begin to feel that you no longer fully align with those who remain on the old trajectory. The way you think changes. The way you use time changes. Even the way you see a weekend changes. If you go further, you become an allocator. At this stage, you are no longer obsessed with making more money in the old sense. You become obsessed with where to place money, when to enter, when to exit, what deserves your capital, what doesn't. You no longer see jobs, projects, or deals as isolated pieces. You see flows, relationships, structures. Your decision is no longer, what do I do today? It becomes, what is my capital doing when I'm not looking? At this level, you start speaking a different language. Risk-adjusted return, position sizing, correlation, downside protection, optionality. Things that once sounded like jargon from a distant world now become your daily thinking framework. And then there is a level very few people reach, insider. Here, you no longer just react to the system. You begin to influence it. You access information earlier. You are present in conversations where decisions are formed, not just announced afterward. You don't just know what might happen. You begin to understand why it will happen, who wants it to happen, and who will bear the consequences when it does. But each step upward is not just an accumulation of assets. It is the shedding of a part of your former self. You start speaking less with those who are not at the same level of experience. Not necessarily because you are trying to separate yourself, not because you have become obviously arrogant, But because what you are seeing becomes difficult to translate into the old language, your considerations have changed. What you accept has changed. What worries you, what drives your decisions, what you call opportunity, all of it has changed. That distance does not open with an explosion. It opens slowly, silently, slow enough that you don't notice it while it is happening. You think you are accumulating assets, but in reality, you are being restructured to better fit the logic of the system. And as you move even higher, you begin to see an entirely different layer, where money is no longer the goal, but a tool for moving power. At first, everything is personal. Your income, your account, your decisions. But then you enter organizations, companies, funds, structures, places where decisions are no longer made by a single individual. Then comes the network. Informal relationships that determine very formal flows. Deal flow doesn't necessarily come because you are good at finding it. Often, it comes because someone remembers your name at the right moment. Because you are mentioned in a conversation you are not present in. Because your reputation arrives before you do. Then comes policy. Regulations, laws, standards, things that define how money is allowed to move, who is restricted, who is prioritized, who has room to maneuver, and who doesn't. At this level, you are no longer just playing inside the game. You begin to influence how the game is written. Family offices, private equity, structures managing capital at a scale where a single decision can reshape an industry, a region, a supply chain. You don't see them on headlines every day, but they sit behind many of the headlines you do see. Here, access matters more than intelligence. You can be very smart, very hardworking, very disciplined, but if you don't have access to deals, don't have the right network, aren't in the right room, don't hear the right conversations, you are still outside the real game. And reputation becomes a form of currency. Not because it looks good, not because it earns admiration, but because it opens doors. It allows you to enter places most people don't even know exist. It helps you be trusted faster, heard earlier, pulled closer. When capital reaches a certain scale, it no longer needs permission. It moves, it connects, it shapes, it rewrites the rules in its own favor. If you've made it this far, you've probably started to feel something clearly. You are not just learning how to make money. You are learning how to exist inside a system designed to keep running, regardless of who gets left behind. At some point, you will have to face the most uncomfortable part. The part most people avoid, not because it is deeply hidden, but because it becomes painfully obvious once you see it. At some point, you begin to notice something you once avoided looking at for too long. Not because it was hidden well, but because it becomes too obvious once you are clear enough to face it. This system is not designed to be fair, and it is not designed to be transparent. That sounds uncomfortable, but it is not a flaw of the system. It is how it was built. Fairness requires equal treatment, the same rules, the same baseline, the same type of opportunity. But this system does not operate around people. It operates around capital. And capital does not ask whether you work hard, does not ask whether you are moral, does not ask whether you deserve it. It asks one cold question. Where do you stand in this structure? Transparency is the same. It sounds ideal. Who wouldn't want clarity? Who wouldn't want major decisions to be visible? Who wouldn't want to know where the real risks lie, who holds them, who transfers them? But if every flow were fully exposed, if every motive were clearly named, if everyone saw how the system stratifies and protects itself, it would not run as smoothly as it does now. It needs a certain level of opacity, not so opaque that it becomes chaos, just opaque enough that most people continue participating without asking too many questions. So what is this system optimized for? Not fairness, not transparency. It is optimized for preserving capital at the top and for maintaining the stability of the entire structure. Those two things sound abstract until you start looking at very ordinary, familiar, real-life examples. A company lays off hundreds of people. The news comes out on a Tuesday morning. By afternoon, the stock is green. Analysts talk about disciplined cost management. Executives talk about long-term shareholder value. No one has to lie. No one has to say anything false. Everything can be completely legal, completely reasonable, completely logical, if your perspective is capital. Below, it is a family losing its primary income, a mortgage becoming more frightening, a father opening his laptop in the kitchen at midnight, rewriting his CV. A mother sitting in the car 10 minutes longer before going inside because she doesn't know how to tell the kids. Someone who just got laid off still has insurance until the end of the month and tells themselves that is lucky. Above, it is margin improvement. A difference enough to make next quarter look better. A move enough for the market to nod. Debt is the same. At the personal level, debt is pressure. It sits in your mind like constant background noise. Every month when payments are due, every time interest rates change, every unexpected expense, you recalculate everything. Which meal to cut, which trip to postpone, which purchase to delay, which call to avoid because you know it's an unknown number. Debt at the human level is not just a number. It is occupied mental space. But at the system level, debt is profit. It is predictable cash flow, a measurable asset, a product that can be packaged, something that can be sold, traded, rated, and used as a foundation for further leverage. What weighs on your life becomes, somewhere else, stable. At the lower level, crisis is loss, panic, the feeling that the ground is softening beneath your feet, red portfolios, unstable jobs, evenings spent staring at spreadsheets not knowing what to cut first, delaying the doctor, delaying moving, delaying having children, delaying everything. At the upper level, crisis is described in a different language: repricing, dislocation, opportunity. Good assets sold at cheaper prices. Weak companies acquired more easily. Those with liquidity watch the board contract, then step in exactly when others are forced to sell. The same event, but two completely different experiences. And the gap between those two experiences is where many people begin to misunderstand the word wealth. Wealth is not just having more money. Wealth, in the coldest sense of the system, is the ability to detach from consequences. It is when a shock that disrupts one person's life is just a minor adjustment in someone else's portfolio. Wealth is the ability to detach from consequences. That sentence sounds harsh, but it is true in the way uncomfortable truths often are. When you are at the lower level, an unexpected expense can ruin your entire month. A medical bill, a broken car midweek, reduced working hours, a contract not renewed, a decision made by someone you've never met. One small change is enough to destabilize everything. When you are at the upper level, that same type of volatility may just be a slightly off number on a dashboard, a position to close, an allocation to adjust, an email to reply to. Life continues at a very different rhythm. What is the coldest part of this? The system does not need you to feel that it is fair. It does not need you to like it. It does not need you to understand it. It only needs you to keep believing that if you play correctly enough, the rewards will eventually match your effort. And that is the most dangerous point. Because once you believe the game is designed to be fair, you stop asking why starting points differ so much, why the same level of discipline leads to different speeds, why the same shock breaks one person while another buys more. You turn everything inward. I'm not good enough. I didn't try hard enough. I'm not disciplined enough. Sometimes that is true, but not always. And the moment you confuse narrative with mechanism, you start optimizing the wrong thing. Now bring all of this closer, not at the level of tens of millions, not in closed rooms with family offices or private equity, but right where you live every day. Your loan, the interest you are paying, the job you are doing, the These things are not separate. They are not random fragments sitting next to each other. They exist within the same system. They are the most direct touch points between your life and the logic of this machine. You go to work for stable income. That income flows into spending, debt repayment, saving, investing. Banks take that flow to expand credit. Funds take that credit and liquidity to push money into larger opportunities. Corporations receive capital, expand or cut to optimize results. And those results shape wages, jobs, asset prices, borrowing costs, and the stability of your life. The loop keeps running. You think you are outside trying to get in. But in reality, you've been inside for a long time. You are not outside the system. You are its input. You can feel this without being able to name it. The sense of always being one step behind, always arriving late, always reacting instead of creating change. News breaks, then you know. Rates change, then you feel it. Layoffs happen, then you get the email. Housing prices rise, then you realize you've been pushed further away. You might blame yourself for that feeling. But often, the problem is not that you are less capable. The problem is that your current role in the system is inherently reactive. You are placed in a position that must adapt, not one that gets to design. Of course, learning more still matters. Discipline still matters. Serious work still matters. No one denies that. Those things can help you move up to a certain level, give you a thicker buffer, broader choices, more breathing room. But if you don't understand the structure, you will keep optimizing behavior inside a game whose full rules you've never seen. You will keep adjusting small tactics while the larger strategy is decided elsewhere. The most dangerous thing is not that you don't know a few investment techniques. The most dangerous thing is that you believe in the wrong story about how money and power actually work. Because when the story is wrong, many decisions that seem right can still lead you to outcomes that feel exhausting and confusing. You do everything you're supposed to do, work consistently, save, try to live responsibly. Yet the feeling of falling behind remains. The sense that everything is always slightly more expensive, slightly further away, slightly harder, remains. Not because you imagined it, but because you are living inside the consequences of a system where the narrative for lower levels is simpler than the real mechanism. And then, quietly, the story returns to where it began. 8:07 a.m. Another email. A familiar subject line. You open it faster than before. Not because you want to, but because your body has learned the reflex. The way your hand touches the trackpad, the way your chest tightens slightly before scrolling, the way your mind runs through every bill in a fraction of a second. You scroll down, you search for your name, and this time, just like before, what you are really searching for is not just a name. You are searching to see where you stand inside this machine. You still don't see your name. But now there is a difference. You understand more clearly what is happening. Not a random event, not an unlucky day, not a company that is just struggling, but a chain of decisions optimized to keep the system running according to its logic. The system doesn't need you to win. It only needs you to keep playing. Keep going to work. Keep paying debt. Keep saving. Keep investing. Keep believing the next round might be yours. Keep staying. And if you stay long enough, something will accumulate. Capital will accumulate. But not just capital. Your role inside this machine will accumulate as well. The way you react will accumulate. What you accept will accumulate. The distance between you and your former self will accumulate. You don't really escape the system. Most of the time, you just change position within it. Some people move up a level and call it success. Some stay stuck in the same place and call it fate. Some see the structure for the first time and no longer hear the same story the same way. That is when things truly begin to change. Not because the game suddenly becomes fair, but because you finally see it for what it is. And once you've seen it, you no longer hear the old narratives the same way. You no longer look at your balance the same way. You no longer hear about opportunity without asking who is transferring risk downward. You no longer hear stability, without asking stability for whom. You begin to see the system not as a promise, but as a structure, colder, clearer, more real. And if you want to see your position more clearly within that structure, understand which doors are real and which are just narrative, and see how money, power, and institutions actually operate behind their clean surface. Stay with this channel.
Subscribe for more story about money, power, and the system.